If you decide to implement these strategies, remember these words of caution. In an established business, occasionally you need to drive higher profits fast. It may be hitting your quarterly numbers for the street. It may be cash to fund a new product or service. It may be the use of a short-term pricing effort to fund a longer-term strategic pricing initiative. In this video, I'll share 3 strategies that you can implement to drive higher free cash flow as soon as the current quarter. Before we begin, if this content is of value to you, please like, comment, and subscribe. For a complimentary PDF on the 5 levels of value-based pricing, please click the link in the description below. The place I want to begin is highlighting the difference between sales revenues and pricing revenues. Let's say you can increase sales in the current quarter by $100,000. That's great news, but the net cash flow from that sale may be small. $90,000 may go to the cost of goods and sales costs, with only $10,000 becoming pre-tax profit. By comparison, if you can capture an additional $100,000 in price, then all $100,000 is pre-tax profit. That is the profit power of price. In most businesses, price is the most powerful driver of profitability. If you want higher profits, then price is the first place to look. To reiterate, these strategies are for businesses with established customer bases. I'm assuming that your business has delivered good value over time to customers, and that value delivery is the foundation for the pricing power punches that you can use here. In my experience, these strategies can deliver 3 to 5% improvement in revenues within 1 year and often within 1 quarter. Over the course of 1 to 2 years, these can deliver an overall 10% improvement. Strategy 1. Revisit your policy discounts. Every business has policy discounts. These may be bundle discounts, price incentives, or giveaways. They are planned discounts or price incentives intended to drive some kind of customer behavior, usually increased purchases. For example, McDonald's sells a lot more fries and drinks by bundling them into Big Mac meals. Far fewer would be sold a la carte. In many B2B organizations, these bundles or incentives are established and then never revisited for years. In one case, a product manager told me his price was discounted by 30% when his product was bundled with another product. I asked how the 30% was determined, and he responded that he didn't remember. I asked how sales would change if the discount was reduced to 20%, and he responded there wouldn't be any change. We made the change and immediately increased revenues on the bulk of his sales by 10%, netting several $1,000,000 for his business. That was pure profit for the company. The point is this: revisit your policy discounts and ask this simple question. Are they driving the customer behaviors as intended, or are they simply giveaways to the customer with no evident behavior impact? This review can quickly yield free cash for your business. Strategy 2. Tighten discretionary discounts. Often companies give salespeople considerable latitude in negotiating prices with customers. These are called discretionary discounts, managed by salespeople and sales managers. Often finance dictates what the discretionary discounting limit is. For example, sales may be given a discretionary discounting authority of 20% and are free to negotiate down to that limit. In case after case, I found that when a discretionary limit is set, the bulk of sales are made at that limit. When finance sets a limit of 20%, we found that 70 to 80% of sales close at the limit. What's going on? Does finance understand customer willingness to pay better than sales? Of course not. In most cases, salespeople simply want to get pricing out of the way. If finance is willing to accept a 20% discount, who is sales to argue? Then they can simply tell customers they're getting the best price and move on to close the deal. Pricing power you might have had has simply been lost. In cases like this, when finance is setting the rules and the market seems to be accepting it, you probably have room to improve pricing. For example, reducing the discretionary discount from 20% to 18% will be largely invisible to customers and net a 2% revenue increase. And for the typical business, this can improve profitability by 8 to 20% depending on your cost structure. Strategy 3. Target low profit customers. When you look at your customer base, there are obviously some customers who are highly profitable, and there are also some that lose money. Working for one client, for example, 15% of their customers were operating at a loss. Literally 1 out of 7 customers was unprofitable, and this cost the company millions of dollars a year. What is the solution? After identifying the biggest offending customers, managers reviewed the accounts to identify the sources of the problems. Was it discounting? Was it cost overruns? Was it overuse of services? Then account managers developed plans to move these customers up or out. Look at it this way. You're in business to earn a profit. If you're losing money with some customers, you may be better off without them. Some businesses make this a regular annual or biennial practice, trimming low-profit customers to make room for better prospects. I've personally used all 3 of these strategies to make my clients hundreds of millions of dollars. If you have an established business, implementing even one of these can make a meaningful bottom-line contribution. That said, if you decide to try these, don't forget these words of caution. Each one of these approaches is a win-lose strategy. That is, you're capturing incremental prices from your customers, but there's no value exchange in return. These can be viable as short-term strategies, but you are banking on the price inelasticity of these customers. In most B2B markets, these work fine. Over the long term, however, you need to rely on win-win pricing strategies where increases in price correspond with higher value delivery. To learn more about win-win pricing strategies, check these 2 videos on value-based pricing. And thanks for joining us here at Value and Pricing Secrets.